In this video, we are going to reveal which investment in South Africa is best suited to improving the financial well-being of the average South African. If you had a budget of only 1,000 Rand to invest, which investment class and specifically which investment product has the best chance of growing your wealth? Official sources tell us that the CPI or inflation rate is only around 5% in South Africa as of August 2023. 5%? Seriously? Who actually believes the official inflation rates anymore? The rising cost of living is a major problem we all face in South Africa on a daily basis. The question we all need to ask, however, is what can we do about it? In this video, we look at the top 5 investments you can make in South Africa with only 1,000 Rand to get ahead of inflation and protect your savings.
In 5th position is cash, or in other words, rands in a bank savings account. We've done a comparison across 7 of the major banks in South Africa, investigating where you can get the best return on a 1,000 Rand investment. And here is what we found. The best general savings account is the Savings Pocket with African Bank. It offers a respectable 7.25% return per annum, and your money is immediately available whenever you need it. The highest yielding tax-free savings account is offered by FNB. You need only 300 Rand to open the account. You also have instant access to your funds, and it pays you 8.4% per annum. Bear in mind, however, that this account does have some strings attached, such as an annual deposit limit of 36,000 Rand and a 500,000 Rand lifetime investment limit. Any transactions into and out of the account will also count against this lifetime investment limit, so this account should not be used for short-term investing needs. The highest yielding notice deposit account is the African Bank Notice Deposit, paying up to 8.95% interest per annum. You need 500 Rand to open the account, and as the name suggests, you will have a notice period requirement before you can access your funds. They have a 7-day, 32-day and 90-day notice option. And the returns vary for each of these options, as well as based on which interest payout option you select. The interest rate offered between the 7-day and 32-day options is pretty close, so personally, we'd be inclined to rather opt for the shorter notice period just to have more flexibility over our money. Now, we've deliberately not discussed any fixed deposit products. Even though these products do pay you a higher rate than the accounts we've discussed, we don't advocate tying up cash for an extended period of time. With the inflation rate at 15% per annum or more, even if you're getting 10% interest on your cash in the bank, you're still getting poorer by 5% each year. This is why it's so important to only keep a small percentage of your net worth in bank savings accounts and invest the rest. But if you're looking for a good place to park your emergency fund cash over the short term, one of these 3 accounts are a decent option. And just in terms of tax on your interest income, you may be interested to know that you don't pay tax on the first 23,800 Rand worth of interest that you earn each year.
In 4th place, we have property investment. Now, you may be wondering, how are you going to buy property with only 1,000 Rand? But there are actually some great options available if you'd like to get exposure to property. One option is to buy REITs on easy equities. A REIT, or Real Estate Investment Trust, is a company that owns and manages large property portfolios, usually mostly commercial properties like offices, shopping centers, factories, hotels, and hospitals. Their business model is basically to buy and manage large quantities of properties to earn passive rental income, and a large portion of this income is then paid over to you as the investor every few months in the form of dividends. Now, it's important to know that whilst most of these REITs own the majority of their property in South Africa, some of them do invest in property abroad as well. And this is really nice if you're looking for some offshore investment exposure. There are currently 29 different REITs that you can buy in South Africa, and the great thing is that you can buy all of them on easy equities. You can either download their app or just use the web browser, and the really nice thing is that you can start investing with as little as 5 Rand. To get you started, feel free to create an account using the link in the description to get a free 50 Rand cash voucher. Now, on easy equities, you also have the option of buying a property ETF or exchange-traded fund. All this means is that instead of investing in a single property stock or REIT, you can invest in a property ETF, which will give you exposure to 10 or 20 different property companies or REITs, all at once. And this means that you get much greater diversification on the same amount of money invested. Easy Equities have a great research portal called Easy Compare, where you can learn more about ETFs and, importantly, compare the performance of their top ETF products. Now, as you can see, 2 of the better performing ETFs over the past 5 years are the Signia Global Property ETF and the OneVest Global REIT. But in saying that, they only returned around 5% annual growth over the past 5-year period, which is not exactly the greatest performance. Now, another option you may want to consider is fractional property ownership with Easy Properties, the the sister company to Easy Equities, and you can invest from as little as R1. Our friend Peter from the Money Marks channel has more information on this. Check out the video in the description below if you'd like to learn more. But when it comes to property investing, our personal favorite remains investing in physical property. Being able to use the bank's money to leverage our investment returns by a factor of 10 is incredible. But with only R1,000 to invest, you probably want to get started with property investment on Easy Equities. If you are interested in physical property investment, however, you can take a look at our property strategy video, which gives you a few of the best investing strategies we've come across.
Taking third place is precious metals, specifically gold and silver. Now, the first thing to understand is that there are two routes you can follow here, namely the purchase of physical gold or silver bullion, or the paper asset via an ETF. When you buy the physical asset like gold or silver Kruger rands, you own the underlying asset without any third-party involvement. That is, you store the physical Kruger rand in your personal safe. But when you buy the paper asset like a gold ETF, you don't own the underlying asset. You're simply exposing your rands to the price fluctuation of the gold or silver market. And this, from a fundamental perspective, is very different. Personally, we always prefer holding the underlying asset, the actual physical Kruger rand in this case. There are, of course, some risks and negative factors to be aware of, such as the risk of transporting and storing the Kruger rand safely, and higher purchase and storage costs. But the benefit is that you can verify the physical asset is actually yours. You're not reliant on the assurances or promises of others. You maintain full control over your investment. Okay, so with all that being said, what can you do with R1,000 if you're interested in buying precious metals? Well, option 1 is to buy a 1 ounce silver Kruger rand. At the time of filming, they retail in the 650 to 700 rand price range. Gold Kruger rands do come in a 1/10 ounce coin, but they retail for around 4,700 rand at the moment. Option 2, therefore, is to invest in a gold ETF product, and again, the cheapest way to do this is with Easy Equities. Taking a look at the top performing ETF table again, you'll see that there are 3 gold ETFs listed, all of which have produced around a 15% annual return over the past 5-year period. Now, there's one more important point we'd like to mention with regards to precious metals. Because the gold and silver markets are denominated in the US dollar, if you own gold or silver, you get the benefit of exchange rate protection, and this is also known as a rand hedge. In other words, if you own gold and the rand weakens, your gold goes up in rand value and you make money, even if the dollar price of gold does not move. This is like investing your money offshore without the need to actually move it offshore. And this is in large part why gold has done relatively well over the past 5 years in rand terms, because the rand has weakened significantly. One final thing, if you do decide to buy physical Kruger rands, whether it be gold or silver, always buy from a reputable dealer registered with the South African Mint. We'll put a link to the authorized dealers in the description below.
Okay, so in second place we have equities, better known as stocks or shares. Buying a share like Tesla, for example, means that you own a tiny part of a business. When this company grows and makes profits, the value of your shares generally goes up. But most shares also pay out a percentage of their profits to investors in the form of dividends. And this obviously is a great way to earn some passive income. Now, the best way to invest R1,000 into shares is with Easy Equities. You have the option to either invest in individual shares, or if you don't know which specific company you'd like to invest in, a really good option is to invest in an ETF. As you know by now, an ETF is made up of a basket of shares. So instead of investing in a single share like Tesla in our previous example, you can invest in an ETF, which will give you exposure to many different shares, and sometimes even different asset classes all at once. This gives you much greater diversification on the same amount of money invested. And again, Easy Equities is one of the best, easiest, and cheapest platforms out there to invest in ETFs. They have many different ETFs to choose from, all of which focus on different parts of the market. We suggest you use the Easy Compare website to do research on the individual ETFs and compare their performance and characteristics side by side. You can see a list of the top performing ETFs in the market, and if you scroll down a little, you can also see a list of the most popular ETFs on Easy Equities. As you can see, the OneVest S&P 500 Infotech ETF has been the top performer over the past 5 years, returning a very respectable 24% annual return to investors. Now, the technology sector has produced impressive returns over the past few years, but the other important factor to note with regards to this fund's performance is the rand hedge component. If you invest in a fund like this, which is offshore focused, you get protection against exchange rate risk. In other words, the value of your portfolio goes up when the rand weakens. Now, before investing in an ETF, we suggest that you download their fund fact sheet, which gives you a full breakdown of things like their top 10 holdings, costs, past performance, and other market data. Make sure you are happy with a particular investment before buying it, and always remember that past returns are no guarantee for future performance.
And finally, taking the first place award for best investment in South Africa in 2023, Bitcoin. Without any shadow of a doubt, Bitcoin has been the best performing asset class of the past decade. And yes, while it is volatile at times, no investor has ever lost money holding Bitcoin for a 5-year period. In fact, it has returned a massive 330% over the past 5 years, or an annual growth rate of around 34% on average. Buying Bitcoin today is like buying Manhattan real estate 200 years ago. It's so immensely scarce and valuable. But the difference with Bitcoin is that you won't need to wait 200 years to start reaping the rewards. 4 US presidential candidates openly support Bitcoin. Countries are adopting Bitcoin as legal tender, and a flood of institutional money is knocking at the door, waiting only for the approval of a US-based Bitcoin ETF, which is likely to happen in the near future. Coupled with this, the next Bitcoin halving takes place in April next year, which historically has marked the start of each new bull run when investors pour into the market and price makes new all-time highs. So we'd be crazy not to be taking this asset class seriously. Now, the other important thing to note is that, like with precious metals, Bitcoin is also denominated in the US dollar. And so you get the same rand hedge or exchange rate protection that gold offers. Again, a weaker rand means that your Bitcoin value goes up, even if the dollar price of Bitcoin does not move. And this is a critically important consideration for us as South Africans with a constantly weakening rand. Every single one of us needs an offshore investment in our portfolio, and Bitcoin fills this role perfectly. So how do you get your hands on some Bitcoin? Well, as South Africans, one of the best options for beginners is to use LUNO. You can buy for as little as 10 Rand, and for those of you who remain skeptical about this new asset class, we suggest dipping your toes in the water with only a very small investment. And as time goes on, with your knowledge and confidence growing, you can slowly increase your investment allocation accordingly. Now, we've created a step-by-step tutorial on how to buy Bitcoin with LUNO, including how to get 200 Rand free Bitcoin if you use our sign-up code. All you have to do is buy 500 Rand worth of Bitcoin on LUNO, and you'll get 200 Rand worth of free Bitcoin deposited into your account within 30 days. That's it. We'll put a link to both the video and sign-up code below.
Okay, so here's a final summary of all 5 top performing asset classes for a 1,000 Rand investment over the past 5 years. Remember that past performance is no guarantee of future performance, but past performance can certainly be a useful metric to look at to help understand the potential future returns. Always remember that you don't need to allocate 100% of your savings to one asset class. You can invest in all 5 asset classes if you want at the same time, according to what you are comfortable with and what makes sense to you. Now, very importantly, if you are going to buy some Bitcoin, you must remember that this is a 2-step process. Buying Bitcoin on LUNO is only step 1. Step 2 is where you take ownership of your Bitcoin, that is, transferring it away from LUNO and safely into your personal custody in a wallet that you control. Remember our gold example earlier, where you like to hold the physical underlying asset in your hands and not just the paper asset? Well, if you buy Bitcoin and leave it on LUNO, you essentially own nothing more than a paper promise. But if you transfer it off LUNO and into your own wallet, you own the underlying asset. And this is critical, more so with Bitcoin than any other asset class. Now, for beginners, we recommend using an app called Moon Wallet for self-custody. It's free and very simple to use. We've created a really easy video tutorial to walk you through the entire setup process from start to finish. We'll see you over there.